The combination of hope for rate cuts and a resilient economy is helping silver outshine gold. Hello and welcome back to our channel. My name is Daniela. And in today's video, we're going to do a quick look at silver to see how the precious metal has been performing, because it has been moving quite significantly in recent days and weeks, outshining, as I said, gold. But before we get into it, please like this video, comment, subscribe. And if you want to leave any questions or suggestions, feel free to do so in the comment section below. So as I was saying, silver has been outshining gold. We've seen some strong resilience from the silver metal. In the last few weeks, I would say since the beginning of May, we've seen this clear upward trend, bullish trend. And one thing about silver is it often displays what I call sustainability within a rally, which means that even though we have days of very strong momentum, we also have some sellers challenging the rise as it goes along. And therefore, that brings some sustainability to the rally, because it suggests that while the path of least resistance and the momentum is clearly bullish, there is, of course, some pockets of resistance along the way. And therefore, buyers have to be more adamant, or I guess show their worth more than it was just a clear upward rally. So we'll look at the chart in just a second. Fundamentally, there isn't that much to review that's new in terms of precious metals. It's still the case of expectations for rate cuts at some point from the Federal Reserve. We've now abandoned this whole hope for 5-6 rate cuts in the year. Markets are now currently pricing in just below 2 rate cuts for 2024. But just these hopes or expectations about cuts coming at some point have been driving precious metals higher. As we know, gold and silver are non-yielding assets, which means that investors do not receive a return holding these assets. So when we see other market assets like yields underperform or drop, then we see gold and silver push higher. So that's, of course, expectations of rate cuts weighing on yields and weighing on the US dollar have helped precious metals push higher. But also, not to forget, we do still have geopolitical concerns, risk of the impact and disruption to economies if we see escalation in tensions from the Middle East, from the east of Europe, and also now added pressure because we have an increase in trade tensions between the US and China. So that is another factor that has been capping the downside for both gold and silver. So the path of least resistance is clearly bullish for these, but also silver. The way it outshined gold is that gold is regarded as a safe haven asset, definitely a hedge against recession or a hedge against risk, somewhere where investors place their capital when they are concerned about the economy or the performance of other assets. Silver also has that safe haven aspect, but it's also a metal that is used in industrial production. And therefore, it also brings in a level of economic uncertainty that plays into it. So in the fact or the combination that we have right now, where we have safe haven demand, a little bit of concern about geopolitical tensions, also hopes about rate cuts, that is playing in favor of both gold and silver. But on the counterpart, the fact that we have, in combination with that, a resilient economy in the US does also play in favor of silver because of this industrial aspect to the metal. So right now, it's the perfect combination for silver to outshine, and it's what we've seen in recent weeks. Now, the only downside that we have seen in the last few hours is we've had a few Fed speakers come out and essentially just give a bit of a hawkish view once again. I'll just read out some of the key takeaways. But for example, Fed Wallace saying that he needs to see several more months of good inflation data before being comfortable in supporting lower rates. So that is a hawkish takeaway from Waller. Bostic, similar as well, saying that they have to be cautious about the first rate cut. They may need to be later, or may need to push this first rate cut later in order not to stoke pent-up exuberance for investment. He was also saying not to expect a rate cut before the fourth quarter. So that only leaves them a very small margin of how many cuts we can see in 2024. And also saying that he sees no rush to cut right now. And then from Fed Mester, saying that keeping rates restrictive is not that big of a risk right now, given the job market strength, and that she also needs to see a few more months of inflation coming down before considering a rate cut. So those three Fed speakers in the last few hours have given a bit of a hawkish view, and that has seeing a little bit of resistance or a reversal in silver. But all in all, fundamentally, pretty strong path of least resistance higher. Let's jump on the chart now to see how it's trading. Okay, so here we have the chart for silver. This is a daily chart. We can see here, as I was mentioning at the beginning of the video, the strong rally that we've seen since the beginning of May, but also the sustainability of the rally. And it means that every 1 or 2 days where we've had a strong bullish drive, we've had a day or two of reversal, attempted reversal, and it's just kind of testing the appetite of, do we really want to push higher? Again, back here on the 9th of May, strong day, strong bullish push, 2 days of actually let's retrace a little bit, testing the waters. Is this bullish appetite really real? Yes. Let's continue higher. So that does draw sustainability to the rally. We are once again at one of those turning points. We saw some very strong momentum last Friday, a little bit of indecision at the beginning of this week. And today, this morning, we're starting to see that reversal lower. Again, those comments from Fed speakers have helped draw a little bit of selling pressure. But again, path of least resistance remains higher. There's still great appetite to continue pushing. The RSI has pushed into overbought territory once again, as you can see. So that is also alluding to potential weakness in the next few days. We may see the drawback extend a little bit down to allow the RSI to come back below 70. That may mean that we see a drop below 31 in the next few days. Again, I wouldn't expect the reversal to be much greater than that, unless there is a catalyst at some point. We do have the Fed meeting minutes coming out this evening that could potentially increase a little bit of the momentum in the sell-off. But for now, path of least resistance remains higher unless we have any material change in these expectations about rate cuts. Let's say the Fed minutes are a lot more hawkish than the takeaways that we saw at the meeting. Then we could see that reversal deepen a little bit, as I said, back below 31. I think as long as we remain above 30 in the next few weeks, we do still have consolidation to the upside. The moving averages are also placed in bullish formation. We are a while away from the 200, 150 moving averages, also the 20. So again, there is still ample room for a reversal without putting in jeopardy the bullish drive or appetite. But we are at one of those points where we may see sellers testing the appetite to reverse and then seeing new buyers come in if all points higher. That is it for today's analysis on silver. Thank you so much for watching, and don't forget to subscribe to our channel.